welcome to the firm. On the show this week, the Ambuja scheme, is it a restructuring or a buyback? And multinationals beware, the global tax architecture is about to change. Our top story this week is about a complex restructuring scheme that could put minority shareholders at a disadvantage. I'm talking the Ambuja scheme. Earlier this week, Ambuja announced a restructuring of parent Holcim's stake in its two Indian cement businesses, Ambuja and ACC. One of Holcim's holding companies, Holcim India, owns a 9.7% stake in Ambuja and 50% of ACC. Ambuja will first buy 24% of Holcim India for 3,500 crore rupees in cash. Then Holcim India will be merged with Ambuja. As consideration for the merger, Ambuja will issue 58.4 crore shares to Holcim's Mauritius holding company. In effect, Ambuja is paying 14,600 crore rupees for Holcim India. That's 3,500 crores in cash and approximately 11,100 crores in stock. And it's getting 50% of ACC, that's worth approximately 11,500 crores at current market price, and 9.7% of its own stock worth 3,000 crore rupees at current market price. ACC becomes a 50% subsidiary of Ambuja, and that, Ambuja says, will help unlock 900 crore rupees per annum in synergies for the next 2 to 3 years. If you buy the synergy argument, then you may think that Ambuja got ACC at a more than fair price. At market price, no control premium. But the more important question is, why is Ambuja buying back its own shares as part of this restructuring? And hence, does that part of the restructuring benefit parent Holcim more than it does Ambuja's minority shareholders? To discuss that, I have with me Raksha Kothari of DSK Legal and Vivek Gupta, M&A partner at BMR Associates. Raksha, Vivek, thank you very much for joining me. Raksha, since we're trying to understand what is the intent of this restructuring, let me first ask you this. In your experience, do companies often use the subsidiarization route to be able to effectively unlock synergies?
Okay. Normally, companies do mergers for synergies, but it's not a totally unheard of situation. Companies do use the subsidiary route to synergize their businesses.
I think at the outset, we got to realize the transaction has two objectives. One objective of the transaction is, of course, to unlock synergies, and ACC and Ambuja being the largest, one of the largest cement businesses in the country, their coming together will perhaps unlock synergies, as the management says. I think the second objective of the transaction, and it's stated so in the way that I read the press release, is the fact that they want to buy the shares of Holcim India for cash.
That's how you look at it. That's not how Ambuja looks at it. Ambuja says we want to unlock synergies. Hence, this was the best route that we could adopt, the most practicable and viable route, which is to buy 24% of Holcim India and then merge the rest of Holcim India into Ambuja and use a mix of cash and stock to compensate for the assets that Holcim India holds. They're at no point saying that part of the objective of this restructuring is so that we can monetize the 9.7% stake that Holcim India owns in Ambuja and hence repatriate that cash back to the parent. They're not saying that at all. In fact, they think we're getting into a flap about that 9.7%. So I'm going to ask you both this question. Was there any way to do this subsidiarization synergy unlocking transaction without Ambuja having to buy back 9.7% of its own stake?
One of the ways could have been that Ambuja buys the 50% shares of ACC through the parent Holcim.
Right. So Holcim India sells 50% to Ambuja.
Yeah, and obviously because of that ACC becomes a subsidiary.
Right.
However, the takeover code could be triggered. I've not really looked at it, but there could be a situation which would not really help the situation.
So fine, that's not practical.
Not practical. The second would be the merger, a merger of both the entities.
Right.
If that was possible, obviously the two entities lose their brands, market share, etc.
You can keep different brands in a merged entity. You can keep different distribution networks in a merged entity. But the management says a merger was not on the table right now because it takes up too much management time. We're not in favor of it. But this could be, sort of a preclusion or a beginning step towards a merger.
Yes, it could be.
So that's the defense for the second step. Third option. Is there any scope at all for Holcim India to have demerged just that 50% stake that it owns in ACC to Ambuja India?
No, a demerger of just shares is not possible. You need an asset.
So
Manufacturing sort of something, or a business technically. Which is an independent sort of a business.
Okay,
but
that's ruled out.
I think the basic thing that we got to realize when we analyze this transaction is this transaction is what it is, and it does achieve two objectives. It has faced criticism for this first for-cash related party transaction, but the way I look at it is, if Ambuja now follows the right process of law in terms of seeking approvals from its minority shareholders in the correct way, in the way that law would normally require them to take that approval, then that's a transaction that shareholders will bless, and that's a transaction that Ambuja should go for. So for example, if I were Ambuja, the way I look at this transaction is it has two elements. The first element is almost like a related party transaction. It is not almost like a related party transaction. It is a related party transaction, and therefore this scheme creates two different classes of shareholders. One class of shareholders, which is the parent company, which has an interest in the scheme which is distinct from the interest of the other Ambuja shareholders. And the second class of shareholders, which is the public shareholders of Ambuja. So the way I would go to a court, or the way I would go to SEBI, any regulator, is to say that I will seek approval in the form of two separate meetings, because I've constituted two different classes of shareholders. And when I do those two separate meetings, and if I achieve 75% a majority vote in my favor in both those meetings, then I'm through and I'm done.
But Vivek, you've gotten ahead of my question. I'm not asking what the legal process will be. I'm just saying this purchase of 9.7%, and forgive me for being stuck on that, but this purchase of 9.7%, according to you, is a stated objective. According to the company, it's not. And according to me, it's a selective buyback, which in some sense is unfair to minority shareholders, because what Holcim could have earned through dividends over the years from Ambuja, they've sucked out in one tax efficient way.
No, so first of all, I don't directly see this as a selective buyback of 9.67%.
Okay, capital reduction, is that more acceptable?
24% of ACC value is slightly different from 9.67% of Ambuja value. So therefore, to that extent, the cash going out there is 3,500 crores. 9.67% of Ambuja is probably 2,800 crores or something. So I don't see that direct correlation.
Okay.
What we got to realize is the tax efficiency is also, because if you hold through Mauritius, you satisfy the Mauritius tests, tax efficiency could result. Can the tax officer question this?
I think he will, because the rules have been tightened when it comes to buyback, and the scrutiny is a lot more now.
Absolutely. So the tax officer could say substantively this transaction is one as a result of combining both steps which happen through a single scheme, that the net result of this is that some form of buyback has happened, and therefore some form of buyback taxation should arise. I don't know. I'm not sort of going into that question. Tax officers are always free to raise.
Is this unfair to minority shareholders? That's all I'm asking.
See, minority shareholders will be given the opportunity to cast their votes on this matter. There are certain advantages to minority shareholders.
Okay, Vivek, I will persist. I will rephrase my question. If you were a minority shareholder, how would you view this 3,500 crore rupees in cash that is going to the parent? Would you view it as unfair?
So what I would need to do is, I would need to analyze. To me, the biggest issue that
Okay, Vivek, you're sitting on the fence. You're sitting on the fence. Let me ask Raksha if she's joining you on that fence or not. If you were a minority shareholder, Raksha, would you look at this 9.7% repurchase, let me call it that, suspiciously?
Yes, because I've not yet been able to understand the reason for the initial 24% purchase.
So why is there a cash outgo? Why not merge all of Holcim India into Ambuja using stock?
I'll tell you, I have a more fundamental issue with the scheme though, which issue is not so much from the perspective of an Ambuja minority shareholder, but which is more from the perspective of an ACC shareholder. I think I can still get my arms around the fact that cash has been paid. The cash has been paid preferentially to my parent company, and I would just see whether it's fair value, whether ACC is good value, etc. The more fundamental problem that I have as an ACC shareholder is, up until now, Holcim was a company which had 50% shareholding in Ambuja, 50% shareholding in ACC, both of which are cement assets. Now you're creating a structure where Holcim has 60% shareholding in Ambuja and an effective 30%, which is 60 into 50. So an effective 30% shareholding in ACC. India is a growing economy. There will be a lot of growth and expansion in the core sectors, notwithstanding what the cement sector is going through today. So does the fact that now I have differential shareholdings in two companies and the balance is public in both companies, does that cause the Holcim management, which will be the management taking all the calls in terms of expansion, does that cause their decision making to be conflicted or change in any way? I think that's the fundamental question that I will be asking as an ACC shareholder.
I get the point you're making, Vivek.
Yes.
Raksha, come in here, not necessarily just to comment on what Vivek is raising, because what he's saying about ACC shareholders is fair from a point of view. Do you see minority shareholders voting in favor of this? I know it's an unfair question to ask, but I'm still saying from a perception point of view. All Ambuja shareholders benefit from Ambuja's acquisition of ACC. The parent benefits a little more by getting to take home roughly 3,500 crores, of which about 3,000 crores could be apportioned towards that 9.7% stake. So the parent benefits a little more than all other shareholders.
So basically, I think the minority shareholders will have to consider whether the synergies are good or whether they have lost out on some, dividend of 3,000 from the 3,500, which was the cash lying in the company. And that is something which they will have to analyze, come to a conclusion and vote.
I suppose that's what it will come down to. Are the synergies worth this restructuring and the loss of cash for Ambuja? Raksha, Vivek, thanks very much for joining us. It will be interesting to see how minority shareholders vote on this scheme. That is in the several weeks to come. With that, let's take a quick break on the firm. Up next, multinationals beware. The global tax architecture is about to change.